A very warm welcome, everyone. Thank you for joining us today for our webinar titled Building an AI-Powered Investing Strategy for Asset Managers. In this webinar, you will learn how to effectively use technology to capitalize on AI insights for data-driven results and mitigate challenges facing the modern-day asset manager. I would like to begin by introducing our speaker for the day. Alexander Kolb is the Managing Director of Product Strategy at Boosted.ai, responsible for platform success. Working at the intersection of finance and technology, Alex is passionate about bringing cutting-edge, accessible products that augment the investment management process to a broad user base. Prior to joining Boosted.ai, Alex was in charge of Uber's EMEA $1 billion plus delivery business line and helped launch a personal money management startup in the UK. Before moving to tech, Alex was a cross-asset buy-side trader at Scotiabank's 1832 Asset Management unit. Alex holds an MBA from the London Business School in London, England, is a CFA charter holder, and graduated with a finance degree from Concordia University. Without further delay, I'll pass it on to Alex.
Thanks, SK, for that introduction. Appreciate it. Thanks, everyone, for joining and for taking the time to listen to this presentation. For those on the call who are from Toronto, I'm glad to be back here and look forward to reconnecting to all of you, my former colleagues here. Anybody who's new, I look forward to making the acquaintance. So without further ado, let's jump into the presentation. I'll just share my screen here. All right. So what I wanted to talk about today is how to build the AI-powered investment strategy for asset managers. So we've had a few previous seminars in which we talked about, really technical aspects of the AI ML. And the last one that we had, that one of my colleagues did from Boosted, we really focused on the overview of the AI industry and trends. And today I wanted to strike a bit of a balance to talk a little bit about both. Like, I want to talk about the industry landscape, and I wanted to show you how our platform works in real world scenarios. I wanted to show you how to build a model, how to evaluate the outputs of the model and share these outputs with your teammates. And I wanted to also do a case study on the identification of risks and mitigation. And I wanted to do a case study on, recently what we've all been involved in, which is the what happened during COVID pandemic. So what's recently, our world is really awash with data. Like, there's been a massive explosion of alternative data sets, and everybody's been using data from classic powerhouses like Renaissance, and then to everyday investors or people who consider themselves investors who are basically data mining congressman training reports on Instagram. And as futile as some of these efforts are, sometimes, some things happen and we get something like a GME run up. So what's more important in all these discussions is that there's a lot of data out there these days. And I think what's important is that not only that, how do we harness all this data and how do we ingest it, and then how do we actually gain meaningful insights from it? So this is where the AI comes in. AI allows you to pull this data and allows you to really see the patterns that the human is unable to identify through its own limited mental capacity, I guess I want to say that. But AI really lets you harness this amount of data and gain insights from it. And we have the tools to be able to visualize it and give you the possibility to use this data in any way you want. In our case, for positive outcome in investment management. The AI has really been a theme that's been permeating a lot of professions and a lot of industries lately. So anywhere from insurance, legal, healthcare, we've been using AI to look at not only the process of improvements in, let's say, insurance, but also how to identify fraud, build predictive models for underwriting. And like, for example, when I was working at Uber, one of the things we did was we used this platform that was based on a pattern recognition engine that let us catch this ring of vendors that were creating virtual stores to sell alcohol, and involved about 30 people in the restaurant owners, drivers, customers in this scheme in London, UK, in which they were selling really expensive alcohol to each other and extracting money from Uber from that. So based on the pattern that we've been able to identify from these people just interacting with each other, we're able to extract the fraudulent data and be able to catch these people, and actually were arrested later. So it does work in practice in many industries, and I've seen it firsthand. If you talk about more investment management specifically, so I think the days of basically traditional stock pickers, when you think about, leaning back in your leather chair and reading through newspapers and picking stocks by underlining the ticker symbols on your charts, those days are kind of coming to an end. So the investors are constantly scanning an incredible amount of data, using powerful computers and algorithms to uncover mispricings and then optimize the portfolios and solve for exact position sizing that will result in maximum outperformance. What we call that is basically quantamental, which is combining the fundamental expertise of investment managers with a quantitative tools and newer and more powerful computer algorithms that help you with the organize your insights into a specific outcome. So we marry both and call it quantamental investment. Basically the humans, they're flawed. Like, there's a lot of biases with humans. When you present a human with a ton of data, what happens is sometimes you get paralysis by analysis, and the decisions are really tough to make. So machine learning comes in and is able to purge these biases and create a more objective and science-based approach to investing. But machines, they cannot operate in isolation, autopilot, and they require a perspective, a human decision maker to consistently direct the machine in the direction you want to go. And therefore, in my opinion, when you marry the human and machine, that's what creates the best outcome. So the investment industry has been shifting. There's a set push towards the quantamental. At the same time, there's a lot of consolidation and diversification is happening in the industry. You have the rise of retail. From mutual funds, you have a more and more shift towards ETFs. You have these periodic shocks, like we had COVID and the work from home themes and the acceleration of SAS and cloud software. All these are pointing towards the direction of needing more and more data and needing more and more data mining and more computing power. And thinking about that, how do we harness this and how do we combine this? How do we survive in this new investment landscape? And how do we make sure we're ahead of our competition? So going back to this theme of human and machine, we think that marrying the human and machine is the future of investment management. Basically, nothing can replace the expertise all you guys have with managing portfolios, picking stocks, making decisions, executing trades. It's really tough for a machine to learn that. However, you can really augment that by using the machine learning, because you can potentially either use the insights gained by the machine to either confirm or deny your findings, potentially find some of the inputs that you might have missed, find some other opportunities that might not have been as obvious, and then use your own personal judgment to decide if those are something you want to pursue or not. So combine these two, I think, gives you the best tools to actually be able to take advantage of this the most. So shifting gears from the general kind of overview of what's been happening, I wanted to tell you more a bit about us, and I'll keep this brief. And Boosted.ai, really, what we try to do here is we create a tool, we create a platform which lets you use your expertise, your deep expertise in managing money, and we give you the platform that lets you use the machine learning and artificial intelligence and combine and overlay your expertise over it and drive the machine in the direction you want it to be used. You really can use this tool in this tool is as advanced as you want it to be, or it's as user-friendly as you want it to be. If you're a pure fundamental investor, you can use it for basically portfolio screening, stock selection. If you're really a quant user, there's also a possibility to do that. It's very customizable and easily controllable. So let me tell you a bit more about what we do here. So the platform that we have is cutting edge. It's what we pride ourselves on is that we're not really selling or creating anything canned here. Like, we provide a finance specific algorithm that is tailored towards the specific data that the that specific financial markets generate. We have a really deep bench of experts. We have PhD level scientists that work on machine learning teams, and at the same time, we're able to we have success and proven success in integrating this approach with our clients. Our team is very diverse and also can support this very well. We have experts anywhere that come from Facebook, Microsoft. Our founder had a company that he sold to Microsoft back in the day. Have yours truly here from Uber, worked on the product side here. We have guys that worked at Tiger Management who manage large portfolios of the hedge fund there. So it's a really deep bench of experts that are working on this tool and able to provide you support on a day-to-day basis. We have about 30 clients with a combined AUM close to trillion. And what's actually been exciting to me is when I joined Boosted about 7 months ago, I think we only operated US and Canada. Now we have the operations in Europe and Asia, and we're able to support anywhere, all the clients anywhere from east to west, from north to south. We basically are in all the time zones. We have customer support teams in all the regions. We're a post-Series A company that's backed by one of the largest VC companies in Canada, and on to bigger and better things. So without further ado, how does this actually work? So, if you think about the traditional finance investment management, you have a component that's managed by you, and you have a component where we fit it. So what's powered by you is your traditional approach, where you select a universe you look at. You select the factors that are important to you. Like, what is it you look at? Are you a fundamental investor? Are you more of a trader? Do you look at the daily technical indicators? Do you look at, or are you more like a fundamental person who looks at, balance sheet ratios, income statements, adjustments, etc.? So you get to pick all those. And then that's where Boosted comes in, is taking all those variables, and based on those variables, it ranks the stocks in your universe. And then we give you a tool to actually organize and manage your portfolio later and optimize it. So it's a two-step process that we use. We go from ranking of the stocks and separating winners from losers, giving you the tool to actually optimize the portfolio, and then generate the outputs that you can either trade off of, or you can just use it as a portfolio screening tool. So let me pause here while I change my screen, because now I want to actually show you how this works in practice, which I think is really interesting. Right. So this is our platform, and this is not the home screen view, but for speed, I went to the model creation screen. So as you recall in the beginning, I said there's three things I want to talk about. I want to talk about, well, how do we approach the model creation process, how do you create a model that is going to be driving your AI? Then secondly, I want to talk about, well, how do you actually, when you build the model, how do you actually look at what the output it generates? How do you make sense of these outputs, and how you share them with your team? And then lastly, I wanted to do a case study about the risk management and risk mitigation, and the tools that we have to actually control your model and portfolio a bit. So how do you make a model, and what kind of powerful tools do you have here? So if I go to the model creation screen, you have the menu on the left, you have the information here. Let's call it a test model. As I mentioned before, we have all the algorithms that you can use. Like, for example, one will run linear regression, not a problem. What we really pride ourselves on is our proprietary one, which is called Battle Royale, in which all the stocks are basically pinned against each other and engage in this mini battle, in which all the stocks end up being ranked. Depends on who wins these mini battles, and then you get the ranking of all the stocks in the universe. So let's say we'll pick a Battle Royale noise reduction algorithm, and there's all the notes and the explanation about what it does here. And as you go through a platform, that's everywhere. Dataset selection is actually a screen I wanted to pause on for a second here, because as I mentioned before, algorithm is just one part of it, but data is really important these days. So first, we do have access to all the capital IQ, all the fact set data that you have. And all this comes with the platform already pre-built in. What's actually kind of cool is that also if you want to upload your own data sets, like if you want to look at, for example, Norwegian wind farm wind data or something, or weather pattern data, you can download all this and upload this to our platform here, and you can use it in your model, and the machine will learn based on that data set. Also, I was just chatting with my colleagues earlier, like one cool thing we have now is we have a partnership with one of the short data providers. So like things like, the GME short squeezes, there's going to be all that data integrated in the platform as well. So all this data comes built in, and you can pick it, and then you can upload your own data sets in order to really customize the model towards what it is you want to do with it. Then you move on to goal selection, which in our case, let's say maximizing alpha, but you can also do other things. And other thing now, as a portfolio manager for yourself, depending on where in the region where you're located in or what your mandate is, you can pick your universe of stocks. So you can pick either from, let's say, for the purpose of this demo, I'm just going to pick, let's say, NASDAQ. But what we can actually do is you can really slice and dice it any way you want. You have filtering based on market cap, currency, etc. You can mix and match the stocks from North America, APAC, etc. So you can really customize the universe towards what your mandate is, and you can customize a benchmark at the same time. So once you've picked this universe, you move on to the backtest. So we backtest our models quite extensively. You can pick the range of the dates of the years you want the backtest to be on. It's fairly self-explanatory. Then you go to investment settings, you pick your investment horizon. And this is another screen here I wanted to take a little bit more time on, which is variable selection. So again, in the beginning, we had the data sets, so where you upload whatever data you want, or they use one of the data sets that's available with the platform. Or here you have the data set, and now you want to actually select the variables that the machine will use for its modeling purposes. So if you're more, let's say, like I was a trader, for example, back in the day. So like if we use technical analysis quite extensively. So for example, if I wanted to use that, I can pick all the technical variables, and these come kind of pre-selected. Or if you want to be stick on a more fundamental side, you can do the balance sheet, cash flow, and I mean, you can do all of them at the same time. It's just a matter of like how you want to do it. You can run the model in any way you see, and then you see fit, and then if it works, you can just try again. If it doesn't, if it works, great. Cool thing is you can also browse these variables and really pick and choose, drill down on all these, for example, in this case, S&P capital IQ variables. You can pick cash, like let's say for cash EPS, standard deviation, you can pick, all the sort of parameters that you want to assign these variables. So the bottom line is it's super customizable towards like what are the variables that are important to you in your investment process. And then another built on top of that is that you can actually write custom formulas that combine a bunch of these variables together. So for example, if you want to use moving average of momentum, you're free to do that. So really, really customizable in terms of like the inputs. Then this is kind of like the first part of the process, what drives it. Like once you've selected all these variables, you're able to actually, the machine will go and learn based on that, and will provide the stack rank of the stocks. And then second step is the portfolio optimization. And there's really a ton of options here, and I won't have, probably need a day and multiple webinars to go through all of them. But for example, if you want to look at trading, you can trade based on a view app. For example, you can have your if you're a trader, you can put your daily volume restrictions if you want to exceed 20% or something. You can have all kind of different currencies. You can adjust your benchmark. Like any kind of like portfolio optimization things you can think of are here, and quite often we are able to also build ones on your request. Depending on the complexity, the timelines will vary, but it's a very customizable tool. So basically, this brings us to the end of the model creation process. So once this is all set, you set the model to training, and it will provide the results depending on the complexity of your selection in a few hours to a few days' time. So this covers kind of like the first part, like so the initial step of like the model creation. So now you've had your model set. What does this actually look like when it's done? So you go to, here's my next tab here, and I'm using a really basic Russell 1K model with no optimizations whatsoever. Like it's a one just like basically like a bare bones model that we use for our demo purposes. So this is what our interface looks like. You have the menus on the left with all features and portfolio settings I demonstrated before here. You have all the parameters graphed. You have your portfolios and the properties of these portfolios. But what I really wanted to focus on here is one thing. So as I talked about, as I keep kind of stressing on, is the first step of our process of ranking stocks. So the rankings is the feature we really pride ourselves on. We recently upgraded it to be really cool and user-friendly. So this is what the output looks like. In this case, we're using a 100 stock model, so pulled from Russell 1K. Basically, the machine then picks 100 best stocks in Russell 1K index and showcases you why it picked these stocks. So you have the positive drivers and negative drivers highlighted here. You have these boxes here. Explain score basically is the one I want you to focus on for now. This is the one that the machine assigns as the highest explanatory factor for the specific driver of the stock. So in this case, the machine thinks that the UI is the #1 stock in the Russell 1K right now, based on the parameters inputted in this model. It has a 5-star rating based on these positive and negative drivers. So you can see all this ranking and and a lot of the quant sort of characteristics of why are they the way, like why are these scores what they are and their variations, dispersions. It's all really cool, but you know how can I actually use this? So like let's say if I'm like when I was a trader again, if I wanted to only look at stuff like momentum, I can actually go here and select momentum, and it will highlight to me the pin drivers where it shows me what the momentum score for this stock is. So it's infinitely customizable. Let's say I put like a bunch of factors here and I only want to focus on those. I can use this in 2 ways. I can use this as a sort of portfolio screening tool in which I use the rankings to just kind of check my intuition and see, let's say, every rebalance period, what the machine thinks about the universe I'm looking at, and what the factors that I've selected. So let's say I'm a trader, I want to run every week a model that I look at and see how the drivers I'm interested in perform. And that's great. That's one way to use it. Or alternatively, I can, the way the machine does it is once the rankings are generated, it actually goes and creates a portfolio based on those, based on your optimizations, and you can actually use this as your inputs into your portfolio building. So the portfolio is built from it, but the way you use it is totally up to you. Another cool thing about it is that the ranking by itself is interesting, but then how do I also look at these stocks? Like for example, if I'm in, if let's say, imagine, let's look at something like that everybody knows, like Microsoft, right? If I look at something like Microsoft, what it tells me is that it scores for the positive drivers, negative drivers, but this doesn't really tell me much. A question a lot that comes up all the time is that, well, Microsoft is great, but how does it compare to all the other stocks that are, for example, in the information technology industry? And why does the machine think one is better than the other? So in this example, I use our feature that's called a security comparison, and I compare it to the entire sector, and I put information technology, and it tells me right away, okay, why does the machine think Microsoft stands out from this competition? So it tells me the biggest sort of explanatory factors the machine uses. So for example, it says, actually the analyst expectation in this case is favored in the broader IT sector, but the Microsoft is great. The machine likes it because of the momentum, because it's a large company, because of the market cap, because of its return on assets. So basically, this gives you a really quick glance at like why does this specific stock stands out from its industry, and gives you a good analytical tool to slice and dice your universe and see why stocks are ranked the way they are. So another cool thing is, I don't know if Bill Kim is on the call here, but like when I was back in the day working at Scotia, we had a Monday morning meeting every week in which we actually shared our investment ideas. And I think this would have been pretty cool to have. But what we've actually designed is that, like, now once you have all this, how to actually share this with my team. So we have these one-pagers that we generate. So for example, I generate one for PayPal here. Basically, you can print out this one-pager and it shows you all the ratings, the price histories, the rankings, the hit rate of the model, and the excess return, and the same comparison I showed you earlier of the stock versus its peers. In this case, it's comparing the stock versus its own prior indicators. So this is one page that you can basically just print out, bring with you to the meeting, and say, okay, like I like PayPal because of these specific factors, or like I don't like it because of these. So it's really easy to share with your teammates and use it for your sort of historical record keeping. And at the same time, you can do the same for the entire portfolio, which shows you, well, how does what stocks the machine like, what stocks have moved the most, how the returns have been performing, and all the properties of your model. So it's really easy to share all these insights within your group. With this, I think this is just scratches the surface of all the fun things we can do with the filtering here and exporting. But I want to move on for now. For the last thing I wanted to cover is a case study on portfolio optimization. So as we all know, we've all been touched by latest lockdowns, pandemic, COVID. When it first started, it was kind of unclear what was going on. The market was all over the place. So what I brought up here is the same model I was showing to you earlier. Again, this is a really bare bones model with like no optimizations at all. So we call it like 100 stocks model, no factor controls, which means there's no optimizations whatsoever. And just to give you a brief kind of the way the machine learning works is it's able to, once it's looks at data, it's able to condense all the data it looks at into factors. And the factors are traditional factors like size, momentum, dividend yield, volatility, etc. Some of the factors are called machine 1 through 10. Those are the factors that the machine itself has learned and identified as important in the model. They're not super transparent, or they weren't until we got to them. But these are the ones that really, those are the insight that the machine is able to glean from the data sets that you're looking at that might not have been easily noticeable by humans. And the way these machine factors work is they range in importance. So the machine 1 factor being the most important to machine 10 being the least. So machine 1 factor will contribute the most to the portfolio volatility, machine factor 10 will contribute the least. So if you look at the machine factors and their exposure in a portfolio and this bare bones portfolio, throughout the investment horizon here from 2008 to today, they really jumped around all over the place. They were going from between -2 standard deviations to +2 standard deviations in exposure. So without this sort of optimization, you can see here that during the 2020, the performance hasn't been that great. But again, this is like a non-optimized model that is probably nobody would use because you would actually not want these exposures to be this massive. So how do we actually control for this? So one cool thing that I wanted to show you before I do that is, well, what are these machine factors? So like what we've done here is that I'm switching to this portfolio is called factor control portfolio, in which we actually restricted them. But one first thing I wanted to show is that we really recently, like what we're trying to build here is more of it's not a black box model, but we're trying to build explainable AI. So what we look at is with these machine factors, we want to know what they are. So recently, we just released this feature a couple of months ago. So one of my colleagues has a PhD from the University of Toronto in machine learning and natural language processing. So we use natural language processing to actually look inside these machine learning factors and pull out the risk groups or groups of stocks that the machine looks at when it learns these lessons throughout its training. So we call this semantic risk factors. And for example, if you look at the semantic risk factors for this model that I'm showing, if you go back to somewhere like, let's say mid-COVID, September 2020, what you can see here is that according to the machine, it identified things like resorts, airlines, biopharmaceutical, cloud computing as the stocks that move in the opposite direction from each other. That's why it's called risk group A versus risk group B. So these are the stocks, the groups or sectors that are through natural language processing we've been able to see the machine is looking at as the ones that contribute to volatility the most. So 60% of the model volatility comes from these two groups that move again in the opposite direction of each other. And we know that these are the ones that were most affected by COVID, and totally makes sense that this is why the machine picked up on these lessons. But it's great to actually be able to see what these things are that the machine picked up, and now we're able to do so. So how do we control for this? So in our portfolio settings, we're actually able to restrict the amount by which these machine learning factors are able to be exposed. And here we attached, I think, half a standard deviation exposure maximums with a loose bound. So like when the volatility goes out a bit, like it actually has a bit more play. We've been able to keep the exposures consistent. And if you go back and look at the performance, it hasn't really been affected that much in previous years, but in the last few years, the model has been actually doing quite well. In 2020, it picked up on those lessons I showed you before in those groups of stocks, was able to not be too overexposed to those, and because of that, generate a positive outperformance versus the benchmark, and continues to do so in 2021. So, with this said, I know this was a lot, so I'm going to pause here. It's just scratching the surface of everything that we do and everything that the platform is capable of doing. So I'm going to give it back to SK now and go back to some questions.
Awesome. Thank you, Alex. Let's begin. We're getting a ton of exciting questions. Let's start with the simpler ones. We have an AI strategy. Tell me how I can improve it.
Yeah, so AI strategy, how can I improve it? Well, I think, yeah, let me think about that one for a second. So, like, I think the goal here when you have an AI strategy is, it's good to have them, but like, what are the tools you're using to actually be able to use it effectively? I think what we try to go for here is that, well, we know that our customers use AI, but how do we make it more accessible to them? So, really the improvement of AI, in my opinion, comes from the transparency that AI brings. So, like, as I showed you before, for example, something like semantic risk factors, actually able to see what is it the AI is doing, what are the lessons that it's learning, and be able to output those in a clear and effective manner to show to your teammates. I think that's where, like, the improvements can come from, because when you can actually see what is it the strategy is based on, you can make further improvements to and tweak it. So that's how I think you can improve your AI strategy in that way.
Essentially, just having a more defined problem statement and the end goal to your entire transformation piece, right?
Yeah, I think so. So, like, just being able to actually know what is going on in
Exactly.
your process is important to improving that process. Yeah.
Cool. Thank you. How to consistently outperform the markets? Would you like to take this?
Yeah, sure. I mean, how to consistently perform the markets? I mean, let me know. I'm not sure who asked that, but like, maybe we can talk about it later and share some insights. But how to consistently perform, I think, comes down a lot to your process, right? I think what we try to do is, what I think is, everybody's trying to do, a few things, and they try to do them in the best way possible. I think what's important is actually, when you look at yourself and your sort of competition, it's important not to kind of be left behind, because you want to strive for our performance, but also you don't want to be falling behind your peers, because a lot of times that's how you're evaluated. So I think having tools to match what your competition is doing, especially, for example, if you're a smaller shop that doesn't have like internal capabilities, having tools like what I just showed here earlier, to really take advantage of this AI is what's going to help you the most, because what's important first is not to fall behind, and close that gap by using something that is easily attainable versus something that is harder to do, such as building your specific business line, or opening up new investment frontiers, or building up new hedge funds, or whatever. Like, closing the gap by easily accessible tools is one thing you can do to stay in line with the competition, and at the same time, once you're able to do that, you can strive for outperformance. So, yeah.
Great. Thank you, Alex, for being a support. Next question. How can the same product build a bespoke, unique model for all of the different asset managers across the globe? Sorry, you're on mute.
Sorry. So, yeah, I mean, we kind of touched upon this already, so I think maybe it's an older question, but like, I did show, like, when we were building the model, you can basically, we have the tool and the toolkit to be able to take whatever you kind of inputs you want, build them into the model, and apply the AI algo on top of it, and get the outputs, and then present the outputs, and also in a very customizable way. So I think the capability is there. It's more comes down to what is important to you, and using getting the data that's, first of all, is already built into our platform, for example, but then also, if you care about something very specific, integrating that into the into your process, integrating that into the model and training the model based on the factors important to you. So I think it's, as I showed, like it's very customizable. It's the process is what's the variable here, and the approach is what I showed.
Thank you. Next question. You spoke about risk mitigation. How can your product help my business? And or if you can give me any tips and tricks to get started. Sorry, you're on mute again, Alex.
Yeah, sorry. Yeah, just clicking. I just wanted to bring up my my contact info here if anybody wants to talk offline later. Sorry, can you repeat the question real quick?
Of course. It says, you spoke about risk mitigation. How can your product help my business? And or if you can give me any tips and tricks to get started with risk mitigation.
Yeah, I mean, I can speak specifically to the product. Like I showed earlier, you kind of have to look at where your investment mandate is. So for example, here, what I was showing an example earlier, we were trying to control the volatility by controlling the machine learned factors. So successfully, we have been able to reduce the volatility of the portfolio, generating outperformance. So think, going by what your mandate is, if you want to achieve, let's say a lower volatility, you can control how much of the momentum or volatility factors you're exposed to. So the tool allows you to do that. And I think you just have to know what is you trying to control, and within the tool you're able to do so. And I'm speaking just for this tool specifically, but adjusting your strategy is another approach. But you can also do that in the tool, just varying what the kind of model it's able to use.
Thank you. I do not have any quant expertise. How can I use this product?
Yeah, so I think, I'm not sure I mentioned this during the presentation. I might not have, and I apologize for that. But if you don't have quant expertise, I personally, when I first started Boosted, I didn't have any. I came from a trading background at Uber, which is completely different animal in fintech, in tech, I mean. So if you don't have quant experience, you basically can use the tool as, as simple as the tool to validate your assumptions, to validate your inputs, and then get the list of stocks that you want to look at, the rankings, and use that to analyze what you're looking at. If you want to get a bit more kind of into the quant things, I think like how I would have approached it if I was on the client side, like we do have a customer support and customer success team that we call, and again, in every time zone, and I've seen them work very closely with clients on trying to build up more complex models that our team can actually help you work on. And yeah, if you don't have the expertise to be able to do that, we're able to just come in and help you with that. So it's kind of like what you see is what you get sort of tool. You can build it yourself, and if you need any help or you want to get into the weeds a bit more, you can use our resources for that.
Thank you, Alex. Next question asks, do you have a TCA, transaction cost analysis, kind of a solution built into the platform?
So in one of our portfolio optimizers, we have a field in which you can input the transaction costs that you incur when you're trading, and you can actually you can see how many trades have been done. Like there was a trading screen in there. So like I'm not personally haven't done this, but I'm assuming by pulling all the trade history of the model, you can calculate what the transaction costs are. But I think what's cool is that you can actually control those costs by either reducing your trading, which we have turnover optimizers in our system, so you can reduce that, and you can also trade only during the events. You can trade only on. You can increase your rebalance periods. So my point is that not only you can see what the exact trade history is and derive the transactions from that, you can also see you can also control that by, if you want to reduce the costs by applying those settings in the model, in the platform.
Brilliant, thank you. How easily can you run backtests?
Yeah, it's very easy. So like when I showed the creation process, you can if you want to like test out some variables, for example, if you want to test out the linear regressions, you can do that. In the model, you select your backtest range and you just train the model based on that. And it's a simpler model. It's quicker to train. And if it's something that is very involved, has a ton of variables, it'll probably run overnight and give you the results in the morning. But yeah, it's very easy. Like how I showed you in the beginning, setting up the model, that's basically all it takes to get started. So it's fairly easy.
Thank you. How does ranking and rating interact to produce the portfolio allocation?
Yeah, so in terms of interaction, so the ranking and rating, so the ranking just gives you the stack rank of stocks. So in the model that I was showing you, we're picking 100 best securities. And then these 100 best securities were ranked such because of the star rating the machine generates. A star rating is a standardized score of how much the machine likes the stock. And based on that star rating, we assign the rank to the securities, and then based on these stars, the machine makes investment decisions. So based on that, like if the machine identifies the top 100 stocks, invest in those. So you can set those parameters in the portfolio settings, how many stocks you want to invest in, long or short, in your portfolio. So once the ranks are derived, and once the number of stocks you want to invest in is set, the machine will invest in those in that number of stocks according to its ranking. And you can control like the position sizing and the frequency of the re-ranking of the securities as well.
Thank you. Can customized outputs be set to run automatically? And can they be saved so that you can search them historically?
Yeah, so like there's one of the things, one of the menus on the left in the platform, there was a download button, and the download button basically lets you download all the portfolio data going back historically throughout the backtest. So like if you saw there was a chart there, so if you can scroll back to it, you can get the data. Like we have the data, so you can download it from the front end. Also the ranking screen, you can download the historical ranking there for each security, for each portfolio. So all this easily exportable for you to use outside of the platform as well. We also have an API that you can connect to get this information in directly to your system.
Awesome. Are you looking to expand this expertise to other asset classes? Which other asset classes is this transferable to?
Yeah, so I mean, it's transferable to the asset classes that are sort of friendly to machine learning. So if you think of like something that's has a lot of price history, has high liquidity, has easily accessible data, has a lot of alternative data available on top of it, we can apply it towards those asset classes fairly easily. Right now we're focusing on equities because I think we've done quite a bit. We're expanding our capacities there, if there's anything specific you look at, you're looking for, like I think it's easier if you just shoot me an email. We can take that offline, and maybe I can tell you what we're thinking about that.
Great. I know we're coming up on the 45-minute mark. Let's try to squeeze in what we can. Is this software limited to public equities only? Does it apply to fixed incomes and derivatives?
No, so it's only public equities.
Awesome. Can you please specify the region covered in the system? For example, does it cover emerging countries like China, Malaysia, etc.?
Yeah, so we cover so I know we cover China for sure. We can ingest pretty much any stock universe you want. And we have the regional settings in which you can trade on the time zones of those settings as well. So we can access any universe you want.
Thank you. Can you connect the output directly to a trading platform or a broker or a dealer?
I think it's a bit tougher to do at this point. We do have the API in which you can extract the trading information from. So I think if you want to integrate directly into OMS, like I personally only have experience with Charles River. I'm not sure how the protocol would work. It's again something to explore. So if we can also take that offline and discuss. I could come back on more information on that.
Cool. And there's a few questions around data cleaning and bad data. I'll try to club all of them together.
Sure.
As far as I know, there's insane amount of data cleaning and model calibration work needed to be done to use AI properly for investing. And that is even with a fleet of experts. How do you pull it off with a small team?
Also, yeah, so our team is not that small. So we have about, I think, 15 engineers. And at the same time, the product the product's been in existence for about, I think, 4 years, and it's only gone live in the last year or so, in which we started to actively opening it up to clients, and we've seen tremendous growth on that. But we did take about a number of years to actually get to this point in which we perfected these methods of cleaning of the data, making sure the data is sufficiently available for the machine learning to be utilized at a level that is generates you the best possible results. And within the platform, you can see, like, based on data sets, you can kind of access all the features that come out of those data sets and see what the relationships between the variables are and see if those make sense. So if you're introducing any new data, you can kind of test, check yourself by doing that. But everything that we have existing has already been pre-processed for you. But again, I'm also happy to discuss this more, but I think I would need somebody from a technical side of the company to actually look at that. So again, happy to dive into this more on a more deeper level.
Thank you. When developing portfolio optimization, how do you treat recent IPOs and missing observations? Would you like to answer this?
I know, for example, for portfolio optimization. So whenever we, in our stock universes, so let's say if I picked an example of model creation, I picked the NASDAQ. So whenever something gets added to the universe, this is when we start looking at it. And anything that, we basically treated, our models are trained based on how things were at that time. So we don't do any sort of backwards looking, I forget what the terminology for this is, but basically we're training our models at every period. We're looking at the past data, and so we're not using any future data to train our models. So if anything comes in the IPO, we treat it as something that was added to the index at that time, and only started taking that into account at the next rebalancing period. So yeah, so when something gets added or removed from a universe, that's when the new security gets taken into account. I don't know if that answers your question, but yeah, feel free to reach out. I can look into that specific case that maybe you're looking at.
For sure. And to our attendees, as a side note, if you're not able to get to your question, or if there's more context that you would like to discuss with us, please feel free to reach out to either Alex, myself, or through our website. We'll be very happy to have a conversation with you. With that, in the last 2 minutes, I would like to take up a two-part question. Is it possible to check your math on the created variables to be sure that the machine is seeing what you intended?
Yeah, sorry. That's kind of I would need a bit more context for that. I know, so checking your math in terms of I know that the seminar, the webinar that I was doing today wasn't really focusing on that, but there's a whole section in the app called feature interaction, in which you can see what the machine thinks of each specific feature in the model, how that feature interacts with other features, and see if those outputs make sense. So you can graph all that, you can plot these features and see if this output is is along the lines of what you're expecting. So I think that's there's a visual way to do it, and there's a way, as I said, you can extract the data from the platform and see if the outputs make sense. I think, yeah, I'd love to have a bit more context on this, and also involve somebody from a technical side to actually maybe dive in a bit more into how we do these things and how the math, what is it specifically you're looking for to check. You can feel free to contact me, but there are front-end tools and data extraction available for you to do that.
Thank you. One last question, Alex. Is it better to give machine raw data to draw its own signals, or to input your own signals and see if the machine agrees?
Yeah, so.
Or is that subjective?
Yeah, I'm not quite sure, to be honest. So is it better to, sorry, can you repeat that again? Is it better to
give the machine raw data and allow it to draw its own signals, or to input your own signals and see, if your interpretation or your prediction is in line with what the machine also thinks?
Yeah, so I mean, when I was doing the model creation, you can basically put any data set in that you want. And if you want to just run a model based on that and see what the output looks like, you're free to do that. In terms of the specific signals, I'm actually not quite sure. So yeah, like let's talk offline about that, because I'm actually not sure how the ingestion of that would work. So yeah, let's but happy to talk about that.
Thank you, Alex. With that, we are at the end of our session.